following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. It is Bernanke Testimony Day on Capitol Hill, where, of course, the Fed chief gets to go in front of all the politicians who get a chance to make some speeches. But obviously, if you've been tracking the market this morning, as I have, and I'm sure most of us, many of us at least, listening today have, you've noticed that we did have a positive start on the major indexes, and that has now been erased as the Fed chief has been speaking. And, of course, a couple things. He said, no surprise, he says that he is seeing some increased weakness in the economic outlook, and also talking about the Barclays LIBOR incident that happened as also having undermined some confidence. It doesn't take much these days to undermine investor confidence in the market, so not terribly surprising to be seeing all that. And I know we're not the political show here. I know we've had a lot of guests who have come on the show and talked about the Fed and what to expect here, but you know, it does seem, just in my view here, not as a trained economist, but it sure does seem that a lot of people do expect some miracles out of the Fed when, in fact, we do have some flawed policy coming out of what you might call some of the branches of government in the U.S., and we'll just leave it at that. So in any case, that's what we've got this morning. We've got the major indexes trading lower. And, of course, it's still fairly early in the session. You really never know when you might have what a friend of mine dubs the market miracle out there that happens later in the day. But one of the big topics, obviously, has just been the difficulty in any sustained trend for traders in one direction or the other. And in fact, we are having one of my favorite guests, a repeat guest on the show, Bob Lang. You also hear him on Ken Shreve's show here occasionally. Bob is a friend of both of ours. And Bob is prepared to discuss today some of these challenging trading conditions that we're facing and have some perhaps ideas, suggestions for how to navigate through some of these. You know, it really is the case lately that we've only been able to identify a trend maybe 4 days or so in a row, and then you get one of these crazy upside days. Now, one of the things to point out, the last time I was on the air here was on Thursday, and since that time we did have that upside trade, some big percentage moves in the major indexes on Friday. But if you look at some of the charts for those, you'll notice that volume came in lower that day. So really, that is a less than convincing indicator when you do see some of these big moves on the indexes. Let me see here. I'm looking at the. I pulled up the IWM. I have that right in front of you. I like to start out with that one because, being the small cap show, why not take a look at the IWM? So if we go back and look at what happened Friday, we did have a 1.2% gain, and of course this being the Russell 2000 ETF, we did have a 1.2% gain that day, but volume came in lower than on Thursday's session, which brought downside trades. So not particularly the kind of bullish trade you'd like to see, despite, of course, a lot of the euphoria you are going to be hearing about in the mass media when you have a day like that, and you hear a lot of cheering that, oh, good, happy days are here again. Well, as the listeners here on TFNN know, you really got to be watching all the signals, watching what's leading, watching what the volume is, what are some of the sectors that are showing outperformance, and that really gives you an indication of what kind of strength you're talking about in any particular move. So let's just take a look here. What I wanted to talk about today, before we bring Bob Lang on the show a little later, I'm going to leave the IWM chart up there because I'm going to talk here for a few minutes about some companies that are not yet publicly traded, and therefore we won't have any charts to show you. But, of course, a lot of the big chatter that has gone on has been the fact that ever since Facebook's IPO 2 months ago, the IPO market has been dead. And some of it has to do with Facebook, but I think some of it, too, just has to do with some of these market conditions. And if a company can wait and does not need to raise that capital immediately, they're going to wait and try and go public when the equity markets are trading more to the bullish side and not try to fight this kind of tide, of course, unless they really do need the money. Now, turns out there are scheduled for this week, last I looked here, 5 IPOs that are planned for this week. Now, we have something here called Durata Therapeutics, DRTX will be the ticker on that. And remember, once again, we don't have any charts on these because they're not traded, so I'm just going to leave the IWM chart up there. So this is Durata Therapeutics. So this company is expecting, and again, a lot of these are going to be pretty small. A lot of the biotechs, they're smaller companies. And as I point out frequently here on the show, when we look at some of these, they are not often, they frequently don't have any kind of earnings behind them, and sometimes there's really not much revenue to speak of because they just haven't brought these new products to market. So we have Durata Therapeutics expected to, they want to raise $75 million, okay? That tells you something right there. And they expect to price between 11 and 13, offering 6.3 million shares. So you're seeing right away a very small deal here. We've got B of A, Merrill Lynch, Credit Suisse, and RBC as the underwriters on this one. So let me see. So this company, the ticker, by the way, will be DRTX. And this company, they develop phase 3 antibiotics for skin conditions. So that's kind of interesting. We might see that go public this week. And, of course, the reason I say might is just because something is scheduled. You often see a lot of these companies do end up postponing the IPO, or you might have some other development. It's not unheard of, by the way, to see a company that is supposed to go public that is announced as an acquisition just the week that it is scheduled to begin trading. So in any case, so that's one there. Let me see here. Let me check my list. Okay, here's a very interesting one that I know many of you out there will know about. Fender, maker of musical instruments, right? Guitars, and they have some other instruments they make as well, keyboards. So this company is scheduled to go public this week. And it's funny because a lot of times you hear about these companies that may be more well-known. And this one, too, small deal, $150 million that they want to raise. Planning to sell 10.7 million shares, priced between $13 and $15. And you've got J.P. Morgan, the underwriter on this, William Blair and Baird. So you've got J.P. Morgan, the biggie, and then you've got a couple smaller boutique investment banks who are the underwriters on this. So kind of interesting. So this one is scheduled also to go public this week. Will trade under the ticker FNDR. Okay? So that's kind of an interesting one. Kind kind of fun there. Always fun with one of these companies. Now, here's another one that I was looking at recently, and I don't know about this. I'm sure a lot of you do. It's called Below 5. We don't have them out here, not really in the western states. I think they're more in the midwestern part of the country, from what I understand, just doing a little bit of research on this, and maybe the east. It's called Below 5, and it's a retailer aimed at kids, and its merchandise sells between $1 and $5. It looks kind of fun, like a lot of stuff that preteens and teens would like. Let's see here. This one too, another small deal. $125 million the company wants to raise. Priced between $12 and $14 is where they want to launch, offering 9.6 million shares. Now, this is interesting. They've got some heavy hitters there among the underwriters. And this is always interesting. The reason that's interesting, you might be saying, Kate, why are you telling us about these investment banks? The reason is because when you get some of these heavy hitters, that does tell you that there might be some additional backing for selling additional shares after the stock goes public. In other words, there will be some perhaps institutional sales support ongoing behind this issue. Not one of these cases that we often talk about here where you have a small company that launches and then following the IPO there might be some analysts covering it, but the investment banks really don't have much incentive to cover it because they're just not going to make that much money from it. But when you have some of these heavy hitters, and I'll tell you who the underwriters are, they're Goldman Sachs, Barclays, Jefferies and Company. You know, it's kind of funny. You run down the list of investment banks, and it's like a list of companies facing scandals anymore, isn't it? But in any case, those are some of the heavy hitters, and they are the underwriters of this one. The company is based in Philadelphia. And interesting, because the fact that it's going public, raising some capital, tells you that this is a company that's in growth mode. It will trade under the ticker FIVE, F-I-V-E. So that's kind of interesting on that one. I think we've got a couple more that are scheduled to go this week. And by the way, the fact that you do have Goldman and Barclays and Jefferies behind this one, kind of an indicator that, again, this one is going to go, that it's not one of these that will probably be postponed for any reason. Okay, here's another one that many people may be aware of, and it looks like the segment's winding down here, so I may not be able to finish all of these. We'll come back after the break. And you know all those commercials for Kayak, the online travel company? I know a lot of us know about Expedia, and a lot of us know about Expedia and Priceline.com. And the reason that this one is maybe less well-known, they do a lot of commercials, it's Kayak, K-Y-A-K. I'm going to come back after the break and talk about this. Let me give out the phone number, 877-927-6648, 877-927-6648. And stick around. We've got Bob Lang after the bottom of the hour. He'll be joining us.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN Joes, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right. Welcome back to this segment of the Small Cap Roundup. I'm your host, Kate Stalter. Today, we're looking at some pre-IPO companies, and the reason I want to do this today is, first of all, it's just an unusual week, is that we have 5 new stocks scheduled to make their debuts this week. Many of those, as I'm sure a lot of you are aware, many of those do turn out to be small caps, sometimes mid caps, but just looking at the deal size of the companies that are scheduled to make their trading debuts on the NYSE and NASDAQ this week, most of these are very small deals, looking like they will make their debuts as small caps. So before the break, I was talking about Kayak, and this is the online travel company. They do a lot of commercials. This might ring a bell with you. They do the commercials with a guy named Frank Reardon. That's just a character they have. He's not a real person. He's just a character who I guess has trouble navigating through the online travel site because he is not able to use Kayak for whatever reason. And that's what this company is. I believe they are just another one of these aggregators of different hotels, flights, rental cars, that sort of thing. So this company will be raising $82.3. They expect to raise $82.3 million. Expected price range will be $22 to $25 a share. So that's a little higher than a lot of these we've seen. And they want to raise They want to offer 3.5 million shares. That's pretty low. And you know what happens with a lot of these companies that have been debuting in the past year or so when they do go public, that there's a pretty low float. That's not an uncommon thing, just a tactic that the companies and the investment bankers are using to drive some demand at the IPO time. So let's see here. The underwriters, here we go. You got some heavy hitters on this one again. You got Morgan Stanley and Deutsche Bank. Piper Jaffray also involved with the deal. So now this one here, let's see. The company based in Connecticut, it will trade under the ticker KYAK. So that's one there. Got one more here. Let me see. I think there's one more that's scheduled to debut this week. Yeah, this one is called Palo Alto Networks. And as you might guess, it's a tech. And actually, it's funny. I'm looking at this. It's based in Santa Clara. You might have some Stanford grads involved with this if they're calling themselves Palo Alto Networks. And they make computer firewall products for corporate, for enterprise users. Now, this one here, a little bigger of a deal, but still on the smaller side. They want to raise $220 million by selling 6.2 million shares, priced between 34 and 37 apiece, and no surprise whether you hear the underwriters on this one, because you know the investment banks love these Silicon Valley-based techs. You've got Morgan Stanley, Goldman Sachs, and Citibank. So once again, this is, I'm just kind of thinking back to 1999, kind of has that little ring to it. But of course, as we know, I'm being a little bit facetious, because as we know, these companies do tend to, when you see these techs, they do have some revenue. Obviously, this one has 7,000, more than 7,000 customers, 7,750, according to Renaissance Capital. So you're going to be seeing something with some revenue to speak of. It'll be interesting when we get to take a look at some of the financials for some of these. So the reason I like to talk about these IPOs is so much is because they really can frequently be some of the best winners that you see out there. I'm going to put up a couple charts right here for some names. Let me show you a small cap recent IPO that I've been tracking for quite some time. And if you are a subscriber to our Low Price Leaders newsletter, you may have seen this one. I'll talk about that a little bit later on in the show after we are joined by Bob Lang. In the last few minutes of the show, I'll talk about Low Price Leaders and tell you where we're at with that right now. But one of the stocks I've been tracking is Francesca's Holdings, FRAN. This is a women's clothing retailer that only recently went public. Let's see, went public back in July. So, July of last year. So, been out there about a year. Okay. I will be right back after these messages. We're going to be joined by Bob Lang after the break. I'm Kate Stalter. This is the Small Cap Roundup. You'll want to stick around to talk to Bob.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back to the Tuesday, the Ben Bernanke edition of the Small Cap Roundup here, and I'm being a little facetious. I'm just watching TV here, the financial networks, noticing that there's no concern today about the European close, not even seeing that crossing my screens here. Just a lot of bad news coming from the Fed chief, but I don't know why anybody would be particularly surprised by that, but we have the indexes losing some altitude from this morning. So as I said before the break, we have one of my favorite guests here today. We have Bob Lang, who is joining us today from Explosive Options. And let's see here. Bob, are you with us? Oh, okay. I guess he's going to join us here again in just a moment. So in the meantime, while we're waiting for Bob, I'm going to talk a little bit more about Francesca's holdings that we have right up there on our screen. I put that up before the break. And this is a small cap stock. It's got a market cap of about $1.3 billion. Decent liquidity, moves about 1.2 million shares a day, so I like that. Now, you see, as with many of these smaller stocks, it can be pretty erratic. It's got a beta a little bit above 1, about 1.06, but nonetheless, you do see there, I've got it up there for you on a daily chart. And if I put it up here on a weekly for you, you can see where it's sported some pretty wide price swings. It's trying to climb out of that consolidation that it formed. By some measures, some people would kind of call that a little handle formation there recently. I wouldn't particularly myself because it's a little steeper than I like to see. But Francesca's Holdings is one of these fairly recent small cap new IPOs that I do like to track. I do think this has some potential right now, but just market conditions being what they are, been a little bit hard to follow any kind of trend, but you do see where this one is working on it. Let's see, 1, 2, 3, 4, fifth week in a row so far of upside trade. I like the fundamental indicators on this one. It is in growth mode, as you might expect from a lot of these smaller companies that do go public. So I understand we do have friend of the show, Bob Lang, who is on the line right now. Hi, Bob. Welcome to the show.
Hi, Kate. How are you this morning? Great to be with you. How is everything?
Oh, terrific. Great to talk to you. Now, one of the things that, I was just kind of alluding to it right there. I don't know if you heard, but I was talking a little bit about some of the challenges that investors and traders, and really people who work in different time frames are having at this moment, just because it's so hard to identify any particular trend. I mean, I can imagine that a lot of people were feeling pretty optimistic and wanting to jump in this morning when we saw a higher open. And then as soon as the Fed chief begins talking, we do see stocks trading lower, and I'm noticing they're moving off their lows even now as I'm speaking. So the volatility, sort of the trendless nature of what we've seen overall, do you believe that that's made it difficult for a lot of people lately? I mean, from what I've seen, it has.
Difficulty is an understatement, Kate, and I got one word for you. It's called uncertainty. There's a lot of uncertainty right now in the markets, and it started, more recently in this last cycle with what was going on with Europe, and then obviously what's been talked about by the Fed and the Fed chairman as of late and what direction they're going to go into. And the fact of the matter is there's a lot of money that piles into these names into this market in a very, very short period of time, and they end up pulling out because they get disappointed by what is being said or what is not being said or what is being done or what is not being done. And I think, we saw a big rally last Friday, right, when the market really took off. I think we had more than a 2% rally, but it was on modest volume, nothing really to write home about. And, I think the guess or the hope, and I talked about this in an article for Real Money yesterday, was that, the Fed chairman's going to come in and state something. And really that was, frankly, quite ridiculous. And, the Fed chairman has never, ever, when you talk about Bernanke or Greenspan or any of his predecessors, never really put policy together in front of Congress. And that would be complete disregard or disrespect for the other people on the Federal Reserve Board. So, the fact that he was going to maybe hint at something like that, that's just not their style, and that's not the way they operate the Federal Reserve. So, I think a lot of that enthusiasm and expectation and excitement from last Friday, they kind of they let the air out yesterday and today, and it should have been like that. But as far as volatility is concerned, you talked about it a moment ago. The VIX is down around 17% right now. It's about 17. It was prior to the Spanish bank bailout. We were in the mid to high 20s. So the volatility has been slashed in a big way. As a lot of these uncertainties are covered, and we get some resolution of sorts, the volatility is going to come down because the fear of being in equities and stocks is not there any longer. The only interesting twist here is the fact that bonds continue to keep rallying, and maybe the bond market is pointing towards much slower growth or possibly even a recession going forward.
Mm-hmm. It's interesting. A couple things happening. As you're speaking, we're seeing the 90 indexes rallying back to just about flat territory right now, which is pretty interesting. So keep talking, Bob, for the bulls there. I guess the bears don't really like that so much. Now, one thing you were just talking about, the bond market. It's interesting because it seems that a lot of individual investors, having been so discouraged by what we've seen in the equities market and really losing a lot of faith, it seems that a lot of people have been going into the bond market, and it just seems that they may be setting themselves up for some hurt here if they're not careful. What do you think about that?
Well, the thing about it is that the Fed has not necessarily, with this last, quantitative easing allegedly program, has not really been creating any money. And what they've been doing is they've just been taking it from one pocket and putting it into another. They've been buying long-term, longer-dated treasuries and selling the shorter-term stuff. So really it's just taking it from one pocket and putting it in the other. I don't particularly think that it's a wise choice to be fighting the Fed. Marty Zweig was a famed hedge fund manager from way back when, once coined the phrase, "Don't fight the Fed." And the Fed has got more money than anybody. And you really want to be in front of a train when the Fed is buying long-term bonds and putting them in their pockets. I mean, I certainly wouldn't want to be there fighting that trend. So in essence, is there a bubble in bonds? Sure, but the bond market's been strong for 31 years. So anybody who's tried to step in front of that train has been smashed over and over again. So is it going to bust? Is it going to bubble? Is it going to burst? Sure, it is someday. I don't know. I have no idea. I'm not going to be able to time that. But we'll be able to know it when people are exiting bonds. So.
Right. Let's talk a little bit about the topic of our show here being the Small Cap Roundup. And I know that you cover various aspects of the market, Bob, but obviously, one of the things that we do talk about here a lot on the show is when you do see some progress in the small caps, they are frequently the ones that are the very first market leaders out of the gate when a new bull uptrend is emerging. And there have been a lot of mixed signals lately, and that's, I think, consistent with what's going on in the general market. You've seen some small caps poised to rally, and then the breakouts fail. So tell us, what are you seeing right now with regard to some of the smaller names? Well,
I kind of see the small cap universe expanding. Again, we talked about it last time. There are quite a few more names that have become small cap names that used to be mid cap or even large cap names due to the fact they've lost a lot of market cap. So, I look in an area like the coal names, and I see stocks like Alpha Natural, which has a 1.5 billion market cap. I'm not sure if that quite qualifies for small cap, but it's a $7. It's under $7 stock. I mean, coal is an area that has really been hurt by regulations and also with alternatives such as natural gas. So, look, the United States is the largest provider of coal in the whole entire planet. So, is that going to be going away? Probably not. But the thing is that these names have been beaten up so far that it might not be a bad idea. I know we had a bankruptcy in the group a couple weeks ago with Patriot Coal. There's a couple others that are looking really, really poor right now. But you might want to take a look at that area as a place to to find a longer term play. Not necessarily my preferred play. To bottom fish. I'm certainly not that. That's not the kind of trader or investor I am. But it might be an area to take a look at as these things have come down so far. There's some value there in some of these names that have become small caps. They used to be mid caps, now they've become small caps.
And I know exactly what you mean about not being a bottom pitcher, because I know you and I pretty much agree on that approach. But what's also interesting about some of these names, when they have fallen so low, they take people by surprise. And they can almost kind of launch some stealth rallies, and there can be some opportunities for traders who are following these closely to get some profits out of some of these.
Absolutely agree. I totally agree with you. And but what you have to watch for is as I know you talk about a lot. You got to watch for the institutional sponsorship and the participation. You got to look for the volume. You got to look for people coming in and finding these names and riding them higher. And momentum in this market is all driven by liquidity. And if that liquidity is coming into some of these names, you're going to get very nice pops on some of these trades. I mean, I looked at a couple of names just yesterday, Kate, and one that caught my eye. I'm not sure if it's a small cap or a micro cap. It could be some combination of both. Is Jamba Juice, JMBA, which is they serve those smoothies and so forth. And if you take a look at that chart, it's launched around 2 and change, whatever. It's up quite a bit, quite significantly this month of July. But this is the kind of thing that I look for to get on. The institutions aren't necessarily piling in because it's a $2 stock, but you're getting some buyers coming in, and it's clear that every single day that they take that stock higher, there's more and more interest and more buyers. This is the sort of thing that catches my eye.
Now, Bob, this is interesting. This one had not come up on my screens largely because of the fundamental performance, as I'm sure you're aware, but it looks like the company is expected to begin turning that around and become profitable this year. That's great.
That's exactly right. I would also tell you that, I mean, there's one of the areas that I like, that I find a lot of interest in, because they do tend to get some big movement, is the biotech area, and one that a real strong one has been this name called Orexigen, which is one of three stocks that has come up with a biotech pharmaceutical stock that has come up with a fat pill, a pill, for a diet pill, so to speak.
Yeah.
Beavis is another one. Arena Pharmaceuticals is another one that just got an approval from the FDA. So Orexigen is one that really started to take off after the Arena Pharmaceuticals came out, and this stock is more than doubled in about a month. And I think one of the best, strongest indicators I've had is when a stock moves 100% in price over the 200-day moving average, like this particular stock. I think the 200-day moving average is about $3.50 right now. The stock is around almost $7-8. It loses gravity, and it just keeps going and going and going. So $7-8 stock now could be very well be double that without ever looking for a pullback. So like when you're in outer space, if you lose gravity, it just keeps floating and floating, and it keeps moving. So.
We've got about a minute left. I think, did you have a couple other names, maybe something, I think we were talking about a truck, something from the truck-making area?
Well, one couple of names that came down more recently is that JB Hunt, which that's in the trucking area. That has my that one that's come down. I'm waiting for it to come down a little bit more, maybe take a look. But a couple actually, Kate, in the tech area, which I think are probably now in the small cap range, are Akamai and Acme Packet, APKT. Now these names have been crushed the last 3-4 months. I think as the technology market, the uncertainty continues to hover over what spending and so forth. These names have come down. It's shoot first, ask questions later. So these names have been shot, taken out back, and shot. So I'm looking at these things to kind of to get into possibly as a low risk entry point.
Yeah, no, I'm looking at that. Very interesting chart. Bob, I can't believe it. Time is up. That's all we got today. Well, thank you
very much,
Kate. Always. It's a pleasure to have you join us on the show. We'll definitely do this again sometime. And everybody stick around. We've got one last segment of today's Small Cap Roundup. I'll be right back with you.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, welcome back. Last segment of today's Small Cap Roundup. And I want to thank our guest, Bob Lang. I enjoy his perspective. I know he and I agree on many of the trading methodologies that we use. He was pointing out some of the biotechs there, and I've often said that the biotechs are an area where I won't necessarily be using the same fundamental criteria that I will on some of these smaller stocks. And the methodology of trading, I want to talk a little bit about the Low Price Leaders newsletter. For those of you who may be unfamiliar with it, you can check it out and take a free trial on the homepage, tfnn.com. What we feature on there are stocks with market caps below $2 billion, and also stocks trading between $5 and $12. That's what we mean by low price, in that range. And, of course, a lot of the small cap names are not particularly low priced. They don't fall into that $5 to $12 range, but they're 2 separate categories of stocks that we look at in that newsletter. I put up a chart there for Cirrus Logic, which is a supplier of audio technologies for Apple, among other clients. And you can see there, I've got it up there for you on a daily chart. CRUS is the ticker. It's now trading below its 50-day line. It's consolidating. You know, I like when stocks consolidate during these times of weakness and uncertainty in the market. We're seeing right now this one is a very solid fundamental performer. The reason I like to look at fundamentals with some of these smaller names is because I'm looking for the higher quality stocks. Now, does that ensure that they are going to always be price leaders at any given time? And Cirrus actually is among the price leaders, despite the current consolidation in this stock. But the fundamentals, what that means is they are going to be attracting the institutional investors. As you may have heard, we do have a lot of mutual fund managers come on the show. They're looking at the earnings growth. They are also looking at the PE. They're looking at a number of the factors that a lot of the traders don't necessarily look at. And that's fine, because the institutional support is what tends to prop up a lot of these stocks. Cirrus Logic is, let's see here, well, we've seen a bit of growing support from U.S. mutual funds and hedge funds over the past year or so, but still not as much as you might expect from an Apple supplier, and a lot of these do tend to get a lot of attention just by virtue of the fact that they are suppliers to Apple. This one has a market cap a little bit shy of $1.7 billion, and it trades at 2.5 million shares a day. Now, a lot of that was increased by last week's trade when you did see the big decline here, so that would have boosted the daily average. We may see that simmer down a little bit in the coming sessions, but this is an example of a watch list kind of stock that I might be tracking in the Low Price Leaders newsletter, something that does continue to garner some institutional support and is showing you good earnings, good revenue potential. And, of course, right now, with the tech sector under some pressure, as Bob Lang mentioned a few minutes ago, we are seeing Cirrus Logic correcting a bit here. But that's just a little taste of the kind of name. And, of course, there are some. We did have a very good trade in a mortgage-related stock called NSM a few weeks ago that was a nice performer for us, and we're out of that right now. Not to say we wouldn't come back in. So that's a wrap for today, folks. I want to thank everybody for listening. Don't forget to go to the homepage of TFNN.com, check out the Low Price Leaders newsletter, and I will be back with you again on Thursday with the next edition of the Small Cap Roundup.